What's going on, everyone? My name is Hamilton with the Trading Initiative, and today we're going to be doing a live webinar here over swing trading. I know a lot of you guys are subscribed and waiting for this, so by the time you watch it, if it's already passed, I hope you appreciate the information. Feel free to hop in our Discord. It will be linked in the bottom, or ask the questions here on the YouTube channel. I'm more active in the Discord, not so much on YouTube. But without further ado, I just want to go ahead and hop into swing trading, okay? How we approach it at the Trading Initiative from a technical analysis standpoint. And how we like to trade the markets in this manner. So the first thing I want to talk about is, what is swing trading? There's a lot of different types of trading: scalping, day trading, swing trading, positional trading. All of them have varying degrees and differences. All right, so what we're going to do is we're going to define swing trading. By definition, swing trading is any trade that you hold for more than a single trading day. That means if you buy something at close and you sell it at open, that is technically a swing trade. For you guys that are underneath PDT, don't have the 25K and you're trading in a margin account, one of the better ways to accumulate that money, and in my opinion, just continue to trade, is to swing trade, because it does not count against your day trade opportunities, right? So we typically use this word to describe trades that last a few days to a few weeks. So even though the definition is any trade that you hold for more than a single trading day, we typically use this to reference timeframes that last anywhere from a few days to a few weeks, okay? So what time frame are we looking at on the charts when we are talking about swing trading? It doesn't make too much sense to use lower time frames if the opportunities that we are looking to play take a few days to a couple weeks to play out, right? So swing trades typically last multiple days, and so a higher time frame, such as the 4-hour or the 1 day or the 1 hour, are used to set up potential entries and exits. So from a macro standpoint, if you are looking to swing trade and hold positions for multiple days, it would be in your best interest to look at the 1 hour, 4 hour, and daily. Now, if you want to complicate things a little more and look into some multi-time frame analysis where you can try to time your entries and exits a little better on the smaller time frame, by all means do so. But the macro standpoint of a swing trade should be viewed on the 1 hour, 4 hour, and daily. Okay? Potential profits. So I will tell you that I'm not sure if it's because of the rise of TikTok and Robinhood or what, but for whatever reason, day trading has really taken over as the main source of inspiration for new traders. But in the past, swing trading was very, very popular and very, very profitable. You do not have to day trade to make a lot of money. So I want to point out really quick the types of profits that you can expect to see, should not say expect, that's a bad word, you could potentially see when you are swing trading. Due to the longer time in the market, your per trade average profit should be higher than any trades taken at day trading timeframes. Does that make sense? You are looking to capture a bigger price movement over the course of a few days to a few weeks. If you're looking at big caps, this can range anywhere between 5, 10, 15, 20, 25, etc. %. When you are day trading those same big caps, if you're trading spot, this does not necessarily correlate 100% to options. You will not be looking to capture a 5 to 10% move in a stock like Apple, for example, over the course of one trading day. That's a multi-day trade, and therefore the potential profits on average are going to be higher on a swing trade than a day trade. All right, so let's move into Crocs, for example. This is a trade that I am in right now, and we're actually going to revisit this at the end of the webinar. All right, so look at Crocs on the daily here. This is the 1 minute. It's very thinly traded. There's not a lot of opportunity to actually trade Crocs as a day trader. As a day trader, you need volatility, you need liquidity to get in and out, etc. Crocs does not offer that sort of environment that day traders tend to thrive in. But as a swing trader, as you can see on the daily, yes, there is a lot of opportunity as a swing trader in this sort of setup to take advantage of. Okay, so before we go into anything else, I need you guys to understand that swing trading is different than day trading, and we are looking to capture a different portion of the trade than a day trader. All right, so let's sum it up. Swing trading provides trades last multiple days to multiple weeks. Also, I do want to point out, for the guys that are working 9 to 5, they cannot afford the luxury of staring at charts all day, especially for day trades. That first 30 minutes is very, very volatile. And typically after the first 90 minutes, most day traders that actually know what they're doing leave the market. And so if you do not have that luxury to be able to trade market open and sit there intently and stare at the charts and play it for the first 30 to 90 minutes, swing trading is a great alternative because it's slower paced. You do not have to stare at charts at a certain time. And like this bullet point here says, they do last multiple days to multiple weeks. So there's some more flexibility in what you are trying to do. Number two, trades are made up on the higher time frames, the 1 hour, 4 hour, and the daily. And number three, trades are on average higher percentage wins. You will profit more generally swing trading than you do day trading. It's not saying that you are going to be more profitable as a swing trader. The average trade will be a higher percentage win simply because you're looking to capture a larger price movement. So how do we find the setups? Let's get into it. How do we find the setups, guys? How do you find setups? Doesn't matter if you're swing trading, day trading, anything. What do you use to identify out of the 10,000 different tickers you can trade in a day that you are going to be active on one particular ticker? What do? Well, there's scanners, right? So there's free scanners such as FinViz, Market Chameleon, Thinkorswim scanner works for free. If you're trading on Thinkorswim, take advantage of it. You have scanners that are paid, Benzinga scans, Redbox, etc. Yes, they are worth it. Benzinga is absolutely amazing. If you are not to throw shade, but if you're a real trader, you're going to need some sort of up-to-date, fast-paced news outlet. And Benzinga, in my opinion, is probably the best. It's expensive. It's $1,000 a year. But, if you're a professional and you actually make money doing this, you pretty much need some form or source of a paid news source, scanner, etc. And also, my favorite, social media, Twitter, Reddit, Discord. Yes, you can find setups here. No, it's not stealing just because you like somebody's idea. Don't worry. Don't obviously copy people's trade ideas, but if somebody throws something up and it happens to fit a sort of setup that you like to trade, it can become very valuable. We do this all the time inside our Discord here. We treat our Discord as kind of a social media outlet where different traders inside the trading initiative on the premium side will throw out ideas. A couple of the guys will like those ideas. They'll all trade it together. These are different sources to find setups, okay? So what we're going to do is we're actually going to look at one of the free sides for you guys because scanners are very, very important. If you're a newer trader, scanners are very, very important. If you're a new trader, scanners are very, very important, okay? It's going to give you a leg up on what you need to be watching, and you're not going to be reliant on some asshole scummy marketer selling signals, okay? They're doing this and you're getting paid, or they're getting paid, you're paying them just to do what I'm about to show you right now for free. So FinViz, very popular, and it's free. This is the homepage. What do? Hit screener. All right, here's a screener. You have a bunch of different things that you can mess with. What are we looking for as technical traders? Technical traders, that means we trade price action. We don't trade the news. We don't trade income statements, none of that shit. We trade price action, the candlesticks on the chart. What do we go? Technical. There it is. Click it. Now you get this awesome filter setup where you can filter through a bunch of different things that will give you tickers that match up with what you're looking for. So as a swing trader on a macro standpoint, when we're looking at the 4 hour and the daily, etc., we are going to be looking to capture pretty much trend continuations or trend reversals. So as a swing trader, we're trying to catch a breakout into an uptrend or whatever your system may be. But most people that are swing trading, this is generally what we're looking for. So I'm going to give you your first set of scanning material. We are going to mess with the 20-day simple moving average and the 200-day simple moving average. So what this means is when we select both of these up, price crossed up and over the 20-day simple moving average, price crossed up and over the 200-day simple moving average, that's saying that the long-term trend is up, 200-day simple moving average, and the short-term trend is up. Price crossed up and over the 20-day simple moving average. Now you get tickers. Look at all of these. Every single ticker that comes up is in an uptrend. Where inside that uptrend is up for debate. And this is where you actually start pulling these tickers up and looking at them on your charts, which we're going to in a second. But this is a very basic filter to scan for stocks and companies that are in an uptrend. Okay, so you got the ticker, you have the company name, you have the sector. So if sectors are hot, for example, if you're trying to trade an EV play or a weed stock play, it will tell you the sector. It gives you market cap, it gives you volume, it gives you price and change. And as a technical trader, we don't really give two shits about PE. But there you go. There's all the stuff. You just did it for free. If this is your first time looking at a scanner, please do this. Now, I know aggro. I've seen aggro before, so I randomly picked it out. You can look at all of the stats there. Aggro, consumer defensive, farm products, apparently in USA. You see the market cap, everything. Let's pull it up on the chart. There it is on the daily. That blue line, 200 SMA, right? The red line, 20-day SMA. So we were filtering stocks that were in an uptrend, up and over the blue, up and over the red. There it is. So where would we have originally been alerted if we were looking at this screener every single day? There's the 200, there's the 20, right there at 575. So for this example, we're way late. We're still above both of those. But if you're scanning every single day, you are looking for the opportunity to play this at that 575 level. Yes, you're up and over the 200. Yes, you're up and over the 20. Let's take it at 575 or somewhere around there, depending on your entry. And obviously, if you were anywhere in that general vicinity, this would have most likely turned into a profitable trade, going from 575 when the scanner would have first alerted you all the way up north of 650. Okay. Very basic shit, guys. And I just laid it out for you. Now it's up to you to go and actually work on the FinViz. Like I said, market commuting, etc. These are free. Premium is better. Paying for scanners is definitely going to elevate your game. But if you are brand new, there's nothing wrong with the free stuff. I highly, highly suggest you use it and try to figure out what type of stuff you like to look at. This is a very simple one. I do not want to endorse this as, yes, this is a profitable filter set. It's just to teach the concept. Okay, now we're going to move into Thinkorswim. We have a tenured trader in the Trading Initiative. He goes by the name of Huso. Shout out Huso. He was so kind to give us a look at one of his swing trade scanners on Thinkorswim. So yeah, you can fucking copy it. There you go. You didn't even have to pay me, and I'm giving you a swing trading scanner. So he likes to use the MACD. So we can actually break down what his scanner in Thinkorswim is looking for. First off, volume. He wants minimum 100,000 shares traded, right? Get rid of everything that's just not fucking moving. Number two, last, price. It needs to move. Price needs to move, okay? Minimum 5%, change, 2%. So nothing that's only moving a little bit. He wants to target bigger moves in big caps. This is generally a big cap, as you'll see in a second with the beta. So you're going to filter out a lot of the big caps that are not moving. You're trying to find stuff that has action on it. Beta of 1, beta, if you don't know what beta is, it's a measurement of volatility. So he's looking for something that is volatile and moving up. You understand how he's starting to layer this in? Volume, very essential for a trader. Price change, that's fine. Percent change, 2%. Something's going on with a minimum volatility or beta of 1. This right here is going to show you big caps that are moving, right? And because he has that 5 and the plus 2%, it's tickers that are moving up. Big caps that are moving up. But where the power comes in his swing trade scanner here is the negative to positive MACD histogram crossover. Do you guys know what that is? If not, don't worry. I'm going to show you an example. I'm not going to explain what MACD is, but I'm going to show you why this scanner makes sense from a swing perspective. Pen, we're going to go ahead and look at this trade again a little bit later, but I want to point out where his scanner would have popped up. Pen, you see MACD across the bottom. I don't typically use it, but we're going to go ahead and throw a red line at that 0. Do you know why? Let's go back 2 slides. Negative to positive. He's not looking for a MACD crossover like every other asshole. He's looking for a negative to positive, right? So if we go back to that same slide, you see MACD goes from positive to negative on the right. It can have positive and negative values. Now, the crossover on Pen was down in the negatives. Every asshole with a MACD indicator is going to be looking at that. So I want to point out something. That crossover at the dip of Pen down near $54, $53, most likely would have attracted a lot of people that are trying to buy dips and stuff like that on trend reversals. That's totally fine. Huso says he doesn't like particularly to trade those because he's had some bad experiences being faked out. So what he likes to do is he likes to wait until the price and MACD go from negative to positive. So he doesn't care about the signals. He cares about the overall strength of the fucking trend. Okay? He's not trying to time a bottom. You try to catch a knife, it can cut you. More often than not, it does. He doesn't care if he misses out on a little bit of the move. He wants risk, less risky entries, we can say, right? So the negative to positive, I added the red line so it's easier to see. You can see that the MACD crossed from negative to positive around this area, right? So he missed the dip where the signals crossed. He bought the higher probability trade. Yes, he missed out on a little bit of profit, but he lowered his risk immensely, okay? And that right there would have given you an entry around 70, 72-ish. Just the concept here, focus on the concept. He's looking to capture moves that are in high momentum, high probability plays. He's not trying to time a bottom with a signal crossover, okay? So there you go. You can, go back, pause the scanner, do exactly what he has, set it up exactly what you want with Thinkorswim, and try it out. He has a bunch of different scanners. He has a lot more complicated ones than that. But this one, I feel, is okay for the public. It's not too complicated to understand because we can see the indicator. We understand what it's trying to do. The entire idea, guys, as a swing trader, is we're trying to play the trend, right? The trend. Where can we find with rather high probability that the trend will continue upwards if we're looking to long? MACD crossing up and over this zero line is a pretty good start. Okay, so let's sum it up. How to find your own trade setups. You have free sources such as FinViz, Market Chameleon, Thinkorswim, etc. Paid sources, Benzinga, Redbox, trading ideas, which is something I didn't actually originally talk about. It's expensive. It's worth it. If you've ever seen anybody trading and you hear tickers being called out in the background by a crazy woman, this is trading ideas. Social media, Twitter, Reddit, Discords. Basic scanner ideas. I'm going to give you a couple that you can mess with. MACD crossover from negative to positive. Very popular. I just showed it to you. RSI crossover from oversold to neutral. Oversold is the 30 for default. Okay, so not crossing down into 30, crossing back up and over 30. This is not necessarily a profitable filter, but it's a great way to start understanding price movement, moving from oversold back up into neutral and generally up towards overbought. Lastly, moving average crossovers. We saw that with FinViz, right? The 20 crossing up and over the 200. The general idea is you want a short-term crossing up and over a long-term moving average because the short-term will show you that the trend is up. Short-term, long-term, it will show you the trend is up. Long-term, so when you have both the short and the long-terms both pointed up, you generally take a less risky trade going long, okay? If you guys don't know what this stuff is, man, this is trading 101. You need to understand these things. You don't necessarily have to trade them, but you need to understand the concepts, okay? So let's move on to how do we actually fucking execute the trade? What do we do here? What do we do in the trading initiative? And what do I do in particular? Okay. First off, pen. Look at this chart. What do you see? Before I even say anything, what do you see? Anything? I'll show you what I see. This is the original chart that I posted back on August 13th, 2020. I have everything written down in a spreadsheet that I will link. You guys can look at every single trade that I publicly posted during the summer, and we just started doing it again in December, okay? And with the original charts and everything, so we had some problems in Discord where people were saying that there might be some, hindsight shit, blah, blah, blah. So I just went ahead and posted the chart exactly how it was, so there's no bullshit. All right, so here's pen, August 13th. We made that decision with the charts a little bit after this, but the idea here is that I saw a resistance level, right? Around $37, $38. And if you know anything about a resistance level, we like to play the breakouts. I, in particular, like to play breakouts up and over horizontal levels, okay? So it's a resistance level. I refer to it as a horizontal level. I like to play the breakouts. And what is a horizontal level? I'm not going to get too deep into it, but essentially it just means a price area, not necessarily an exact price, but an area where sellers are beating buyers. They are beating the shit out of bulls. They will not let price continue past it. But if you've been trading for any period of time, you should know that the more oftentimes a horizontal level is tested, the weaker it becomes. Okay, guys? Trust me. Weaker it becomes, the more times it is tested, because every single time we get back up to that level, buyers are chipping away at the sellers, chipping away at the sellers. The sellers might temporarily beat back the bulls, but every single time the bulls are knocking, resistance gets weaker and weaker. Number two here, the accumulation level, aka a rounded bottom. The concept is, if you've taken my masterclass, you know the Wyckoff model, right? We have accumulation, markup, distribution, markdown. It's the life cycle of a market. The accumulation level that I like to trade is something typically underneath a horizontal level. It shows to me that buyers are looking to purchase this, but sellers are temporarily pushing price down. And at some point, it's going to break, right? So the accumulation level, like I said, if you're familiar with the Wyckoff market model, this is the second part of my trading system, identifying some sort of accumulation level. And that can come in many different fractals and chart patterns. I just so happen to enjoy rounded bottoms. If you don't understand what these are, the concepts, YouTube has free shit. My masterclass goes over it. But if you like trading chart patterns and stuff like that, this is what I am looking for. Number 3, high RVol, aka relative volume. So you know what volume is. Everybody always says volume is the holy grail, follow volume. Does anybody really fucking know what that means? You know, I see a lot of gurus and stuff talking about volume, but when you actually go in to explain it, well, just buy the volume. No, listen, volume is important because it shows you where the opportunities lie in going long. You don't want to buy a low RVol, relative volume, meaning the bars around the candlestick, right? So if you're buying in when all the other volume candles are the same, the opportunity there is going to be greatly reduced because it does not show you that there is that extra gas in the tank to continue up, right? So high RVol is that third piece of my trading system. I want to see a candlestick on that volume histogram way fucking higher than the ones surrounding it, okay? So there you go, horizontal level, accumulation, high RVol. And we go ahead and look at pen. And we're going to go into more of this stuff. I'm just giving you a brief overview. Here's the pen chart at the time that I actually ended up selling, which ended up actually being a pretty bad sell. I got in somewhere in the 40s and I sold somewhere in the lower 60s. And as you're going to see in a little bit, I actually left a lot of profit on the table. But your stop loss management system, your exit management system is entirely up to you as a trader. Everyone's going to be a little different. And I generally like to sell when I think that my trading idea is done. And at this point, just looking at that chart right there, I thought, okay, my trading idea is done. This move to the upside is probably over, so I'm going to go ahead and take my profit. I was wrong, but that happens. So there's the entry for this particular trade on the spreadsheet. Like I said, it will be linked in the bottom. You can look at every single trade, all the winners and losers, and critique all the charts. You'll understand after looking about 5 of them that I'm a very simple swing trader. And nothing that I do is something that you necessarily can't do as well, right? So an entry at 43.86 and an exit at 67 on the dot. Okay, current price is 91.94, so don't worry about that. But it was a 52.76% trade that I made back in early August. All right, let's look at a different one. 10, again, here we go. By the way, I don't fuck with the charts. I keep everything charted. I do that for multiple reasons. 1, so nobody can fucking call me out. Let's be honest. Discord is filled. Twitter is filled. TikTok filled with fake motherfuckers. This is a way for me to safeguard. Number 2, it's a way to identify the personality of a stock, which I will go into in a little bit. Also, I have free YouTube content on this channel on how to identify the personality of a stock and why it matters specifically for pre-market action. I suggest you go ahead and check that out after this if you're interested in stuff like that. So once again, pen, same fucking idea. Horizontal level, we set, we break, look at volume, horizontal level, accumulation, RVol. Wow, amazing. It's magic. It's not fucking magic. It's a trading system. That's it. This one in particular was a little bit more fun because this one came back and tested the horizontal level. There's a concept in technical trading that is called SR flips, RS flips, whatever you want to call it. It's the simple idea that once a horizontal level is flipped, so if we break resistance to the upside, typically we see buyers come in and fill that void. So it becomes a support level, right? So when resistance is broken, it becomes a support level. And conversely, when a support is broken to the downside, it turns into a resistance level that bulls have to get through for price to come back up. So yes, typically we do see price pull back towards that horizontal level, which gives us an opportunity either to add in, or if we missed a breakout entirely, to start a position. Penn did this. We're currently up at 91.94. Sorry, jumped the gun there. 91.94 from an entry around $80-ish, something like that. So same fucking price pattern, same goddamn ticker. There we go. It's not magic. These are 3 tickers. I want to go over 3 current trades that I'm in, so you guys see exactly what I'm fucking talking about. It's not hard. TTWO, CHWY, MDB, all posted in the Discord December 1st with the price, with what I'm looking at, with the chart. No bullshit. All right, guys, let's look at each one. TTWO, original price, 180.51. What did I see here? horizontal level, right? That resistance level. It's tested 3 times. The more times it's tested, the weaker it becomes. The more times it's tested, the weaker it becomes. All right, guys, horizontal, 4-month consolidation period. That's my go-to. The accumulation underneath a horizontal level is like my A+ setup. And what's the third thing I'm looking at, guys? Look at the RVOL. That orange line that mysteriously is across my volume histogram that I added a couple months ago, but in the very beginning, when I was posting charts, I did not have. I put this there for beginner traders that are inside my Discord as an easy way to understand relative volume. If the candlestick on the volume histogram is above the orange line, which I believe is a 30 look back period. I believe it's 30, it might be 20. I think it's 30. Means that if it's up and over, let's say it's 30, the 30 look back period, that means that volume on the day is more than the previous 30 days average. So relatively speaking, if the candlestick is above it, it's a motherfucking go. Original price 180.51. Right now we are at 203.39 for a percent change of positive 12.6752. I don't know why the hell I used red. That makes it look like it's a loser, but it's not a loser, and I'm still in TTWO. Okay, so almost 13% here on this very, very basic breakout. And our vol is only going up, as you can tell. So I fully expect this to open up on Monday with a higher gap up. Chewy. Who the hell buys stuff for Chewy? I didn't even know what Chewy was. It's a dog. It's a pet store. Like, what? Everything that I ever bought for my dog was off Amazon, but I guess Chewy's popular. So here it is, 77.65. We see the horizontal level break out of a 3-month accumulation period. I missed the original breakout. So sometimes this happens, guys. I missed the original breakout and I got in a little bit late. But the original price was 77.65. And by the way, this is a ascending triangle, one of the highest probability triangles that you could be trading for a break to the upside. Horizontal level at the top, resistance, accumulation underneath with ascending trend line at the bottom showing you that the lowers are becoming higher. Each low is a little bit higher until finally it pops up and over. This right here, especially when we're day trading, is like my A+, right? So took Chewy, current price $100.13 for a almost 29% gain here. Now, I'm going to be honest with you. I have no fucking idea what Chewy is. I don't know anybody that fucking buys from Chewy, but I don't care. If the chart says buy, I buy. That's it. I have zero feelings about this, and I will cut it when it loses. Once again, you'll notice a lot of these charts, we have a breakout, a pullback to that former resistance level that is now support before a takeoff. Look at the volume. It's increasing. Chewy, I'm expecting to continue to go up as well. Okay, so that's 2 in a row that you've seen the SR flip with a test. You see a breakout. You see R-ball. This is very fucking easy, guys. Number 3, MDB. 28670 on the original price here. Now, I've traded MDB before, so I wrote down former fake out. New highs, but expecting a pullback to SR near 271 to 270 before entry. All right? I want you guys to understand that. This is the reason why I keep the stuff on the charts. Identifying the personality of the stock. You can see in the middle of the summer, I took an entry and immediately got fucking dumped on. It was a bad trade. It was a failed breakout. And I got punished for it. So I made a poor entry, exited at a loss, moved the fuck on. Now MDB is showing another one, right? Same sort of breakout. But I know last time it could be a fake out. So I'm waiting for the pullback. I'm waiting for the pullback to 271. So price is at 286. I'm waiting for the pullback. There it is right now. Now look at the fucking chart. Look at the chart. I bought on the fucking pullback exactly what I said to SR 271 to 270 because I understood the identity of the stock. I traded it before. It fucked me one time. It was not going to allow it to do it again. There we go. Now it's up to 376.87 for a 31% profit. This is not magic, guys. Literally, steal my system if it makes you feel any better. I don't know if you're going to do well with it. I do remarkably well with it. There's 3 winning trades that I'm currently in right now. You see exactly what I was looking at. You saw exactly what I was thinking. Pretty straightforward, right? Let's sum it up. Clearly defined entry criteria. Number 1, you do not have to use my system. You absolutely can do whatever the fuck you want, but it needs to be clearly defined, guys. You have to have a reason to enter a trade, okay? Identify the personality of the stock. I personally think this is very, very important, and I don't hear anybody other than like professional traders of the highest caliber talking about that. And the reason why is because most people are fucking marketing. They're not actually trading. So identify the personality of the stock, see what type of information you can get out of it before you enter in. You will be able to save yourself some P&L like I did with MDB. And number 3, the most important thing, guys, like with Chewy, pull the trigger. If you have a trading system, a clearly defined entry criteria, and it says to buy, you fucking buy. And we're going to go over that in a second. But you need to pull the trigger, guys. How many times have you sat on the sidelines where you identified something that you wanted to trade and you decided to sit out, and then 2 days, 2 weeks, 2 months later, it's up huge? Pull the trigger. All right. What if we lose? I want to go over this really quick because yes, I lose quite a lot actually, and I'm not afraid to admit it. AEM. No idea what this is. I believe it was a gold play or a metals play of some sort in early September. We had some on Sunday nights. We go over a Sunday night stock talk in the premium side of Discord, and we saw some relative strength in the metals sector over the previous 2, 3, 4 weeks, something like that. And so I was looking to get some long exposure in some metals plays. AEM, right? With the FinViz shit, remember the sector? I filtered through a bunch of different stuff, found the sector I wanted to be long in, which was metals, found AEM, which fit my criteria on the entry, and I entered into AEM. Now, look, we have the horizontal level, the accumulation, and the volume. What happened? I got fucked immediately, basically. After 2 days, I got dumped on, and I had to sell at a rather large loss. I think it was like close to 10%. That's a pretty big fucking loss, right, guys? And really, I should have stopped out earlier. I was stubborn and held the position too long and ended up having to sell after a gap down, which is literally the worst thing you could do. So learn from my mistake here. If you see a solid red Marubozu candle to the downside, especially on the daily, if that's not in your trading system to buy dips and shit, you should probably just take the fucking loss because it can always get worse, which it did. It got way worse. CDLX. Here's another one. A swing and a miss, horizontal level. Now I want you guys to see where maybe I went wrong here, because I did. I went wrong. I broke a rule and I got punished for it. CDLX. Look at the chart. You see the horizontal level. You see the accumulation. But what am I missing here? What am I missing? What am I missing? Right there. There is no fucking volume on this breakout. There is 0 fucking volume, which is why I stress relative volume as check number 3 on my entry criteria. Now, I entered. Look what happened. Immediately dumped. I broke my rule set. I got punished. Nobody, especially the market, gives a fuck about you. It's you versus you when you're looking at this stuff. Manipulation comes and goes. It's a part of trading. But to blame manipulation for your loss is bad because you're not ever going to learn from your fucking mistakes. And so here's a learning lesson for you guys. If volume is important to you, don't try to jump the gun. Always confirm it with volume. And I want to point out, by the way, I did not take this trade. Matter of fact, when I was putting together this, webinar, I went back and looked at this because I was looking at all my previous summer swing trades. Well, my system worked, just missed it, right? So the original breakout on CDLX came a couple, 2 months later, and we ended up running from the original entry, mid 80s, up into the 140s. So yeah, that's a huge fucking trade, a big one that I missed, but the system remains the same, right? I buy the break of a horizontal level with RVOL and an accumulation pattern underneath. So, and look at that one. Yep, volume is definitely higher. So, sum it up. Cut your losses when your original trading idea has become invalidated. Very, very important. You cut your loss when your original trading idea is invalidated. The percentage and or dollar amount should be second or 0 to your trading idea. If you don't understand the concept of stop losses, I'm not going to go into it during a swing trading webinar. I have free content on my YouTube, position sizing versus account size or something like that versus risk, whatever. Watch the video. It's 10 to 15 minutes long. I guarantee you're going to get more information on how to position size and move your stop losses and set your stop losses than you're going to get in any $100 course. Okay, guys? So if you don't understand how to use stop losses, that makes sense. Watch that free content. But once again, cut your losses when your trading idea is invalidated. It should not reflect the percentage or the dollar amount. And continue to keep your losers charted and journal to review in the future. The CDLX trade was an awesome one to go back and look at. I had the right idea. I had the wrong time. Okay, so having that stuff journaled and charted, you're going to be able to go back and reference that stuff. Also, it's nice for the identifying the personality of the stock, right? If you have it charted, you have your notes written down, you can go back, you can reference that shit. It matters, guys. So take the fucking trade. This is the most important part of swing trading, day trading, scalping, whatever. If your setup shows up, you take the fucking trade, guys. Okay. So one thing I want to show you, this is a portion of the spreadsheet. Look at how many fucking red squares there are. Holy shit. As a matter of fact, look at that one at the bottom. I had like 8 or 9 or 10 swings in a row fail. Yeah, it's disheartening, guys. It sucks, actually. It makes you want to stop fucking trading. But if your system works, you will experience periods of drawdown. Sometimes the market just fucking sucks. Like it happened here in September. SPY crashed. Every single swing that I opened in that period failed miserably. So if you are in a group and they don't ever seem to post losses, I want to let you know that they are fucking lying. This is part of trading. Everybody loses, guys. Everybody loses. But what's the golden concept in trading when it comes to losing? Please, yell it out loud. What is it? Keep your losses small and your wins big. So I don't give a shit if you're a 3-to-1 trader, 4-to-1 trader, 5-to-1 trader, anything below 2-to-1 and you're fucking lying. Like really, realistically, if you're risking 1 to win 1 to 1.5 and you lose 3 in a row, you're fucking done. So I don't believe that shit. I believe starting at 3-to-1. And as you can see right here in my swings, my average loss, I averaged the entire swing trading spreadsheet here. My average loss was 4.3%. My average win was 15.84. The math adds up, guys. I can lose 10 in a row and still fucking win. Okay. This is how trading fucking works. This is how it works, especially swing trading. If you pause this and you look at the actual spreadsheet, or if you want, when it's linked in the bottom, go through. I have winners in the 50%, 60%, 70%. They make up for all of the failed ones and more because I'm trying to hit the A+ setups every single time they show themselves. Okay, guys? So very important concept to understand. You're allowed to lose, guys. If you're a beginner trader, I know how much it sucks. You feel like you're stupid. You feel like if you lose, there's a million reasons why. No, guys, listen. Losing is okay as long as you lose logically. As long as your wins are bigger than your losses by a decent ratio, you're going to be fine. All right? So I want to point out a couple trades specifically for one reason. News. News, guys. TikTok and social media filled with beginner bullshit where people are talking about fucking mergers and on this date this is going to happen and blah, blah, blah. And they make these fucking wild predictions and 1 out of 20 comes true and then they're hailed as a fucking saint. Listen, it's bullshit. I'm about to prove why, okay? I trade off of price. Marketers market. Traders trade. If somebody tells me, wow, Microsoft is doing really well, you should buy it. It's going to be $300 soon. I should be able to pull up the fucking chart on Microsoft and see buyers buying, right? If the chart doesn't show me that buyers give 2 shits about what this guy is saying, I'm not going to fucking participate. You get all the smart asses that say, oh, buy the rumor, sell the fucking news. Yeah, I get it. Hindsight's really fun to make fun of people. But the reality is, once the news headlines hit, everybody has the same fucking idea as you. And what happens more often than not, the market punishes people that try to chase news stuff. Okay, so I'm going to show you right now. I entered into Crocs at 45.08 at the end of September, only because we had a horizontal level with a rounded bottom breaking out. RVOL, everything else across the board. Okay, what happened at the beginning of October? So I got in at the end of September. End of October, we had a huge spike in volume. A huge spike in volume. Price reflected it, but really volume stole the show there. What do you normally assume is happening when volume goes off the fucking charts like this? Somebody knows something, right? So I was in prior to this. I watched it. I said, okay, something is probably going to happen. This is at the very beginning of October. And then look what hits. A week and a half, 2 weeks later, Justin Bieber collabing with Crocs. First off, thank you, J Beebs. This has turned into a very fucking good trade. You get in based off price and let the news headlines and everybody else chasing those fucking pay you. That's it. Every asshole in the world is going to see this news headline and they're going to go buy Crocs, buy Crocs, buy Crocs. Sure. But you, because you are a technical trader trading off of price action, got in 2 weeks before. So every single fucking Robinhood trader that is buying Crocs is now paying you to hold their position. You got in 40 right now. Crocs is at fucking 60. Guys, it's that fucking simple. You do not buy shit based off of news headlines. People predict. It's inevitable. But one thing I'm going to tell you guys, the guys on TV that predict are paid regardless of whether or not they're right or wrong. They wear a fucking suit and tie. They sit at their stupid fucking desk and make predictions, and they get paid even if they're straight up wrong. TikTok gurus make predictions. Why? Because it feels safe, and it makes them feel good when 1 out of every 20 becomes true. Everyone looks at them like they're a fucking saint and they know something that everybody else doesn't. It's bullshit. Problem is those TikTok gurus don't get paid when they're wrong, but they do get paid based off of subscriptions. So go fuck yourself if you're doing that. But buy off of price action and let the news pay you. Okay, we're gonna look at one more. Zoom. I got into Zoom August 21st, $290.69 initial price. Zoom, crazy fucking run up. Perfect example of why are you buying the all-time high? Why are you going, this is overbought, blah, 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 million, fuck you. Fuck you. Horizontal level, accumulation, RVOL. I don't give a fuck what anybody says. What happened? Look at the date, August 21st, August 31st, 10 days later. Zoom fucking kills earnings. Fucking kills earnings. Total revenue, $663.5 million, up 355% year over year. What do you think Zoom does, guys? Fucking gaps up. I went from $290 to $463.91 in like 2 weeks for a fucking almost 69% gain. It's not fucking magic. I buy the same shit every single fucking time, and I let the news boys and the earnings pay me. I hope I'm painting a picture. I know I'm coming off as an asshole, but sometimes you have to be a little bit of an asshole because there's a lot of bullshit out there and people are paying for a lot of stupid shit that doesn't make sense. This is what you should be looking at as a technical trader. Now, I do want to distinguish everything really quick. This is from a technical standpoint. This is not fundamental analysis. It's not sentiment, nothing. This is if you like looking at charts and you like buying based off of fucking candlestick movements, I am painting a picture for you of why you are the best. Fuck the news headlines. Fuck the charlatans. You're the best. Trade based off candlesticks, okay? News is always late. News is always late. Take the trade based off of price action, okay? And let the news fill your pockets with fucking cash. Let the people on TikTok shill their stupid fucking ideas. You got in a week or two prior, so everybody that's going to listen to their shit, 500,000 to a million fucking followers, let's be honest, maybe 1% of those actually trade, but that's still a decent amount. Let them shill your fucking ticker that you got in. They think they're big brained, when in reality, you're sitting in your fucking nice car getting paid while they are making money off of $20 subscription fees. All right, guys. So this is going to be the end of the swing trading webinar. I do want to, this is not going to be a sales pitch, but I at least need for you guys to understand that it's available. If you like this type of content, if you want to learn how to read charts and buy based off of technical pattern breakouts, stuff like this, we do have a 30-day masterclass. It's fucking 30 days. Every single day is generally around an hour of material. It's split into 2 different sections. You have the lecture portion where it slides kind of like this, and then we have a charting portion. It's typically around 30 minutes and 30 minutes each. And we have a quiz at the end, we have homework at the end, and we have a test at the end of every fucking week. There's a lot of stuff to get through in this 30-day masterclass. I built it with the idea of memorization and application. So I built interactive material that challenges you at all stages of the course. We have live examples in real time when we're going through it. Quizzes, homework at the end of every lesson, test, blah, blah, blah. It's fucking great. As a matter of fact, if you want to read reviews, you can come into the Discord, go to the testimonials, and you have guys in there that have been through the masterclass, and you can read an unbiased, truthful opinion. Feel free to DM them. I, as of now, have not had any negative reviews, and I routinely ask people what I can do to continue to add value to that course, and I continue to add things all the time. So if you're interested in learning how to do this shit, I highly suggest taking the 30-day masterclass. It's a one-time fee. You will get it forever, and I will never charge you again for any updates on it. One-time fee. Secondly, we do have a premium side of the Discord. I personally think almost every single guy that's in the Discord right now on the premium side has gone through the masterclass, and I built it this way for 2 reasons. One, creates a powerful 1-2 combination. You take what you learned in the masterclass. It's like a college course, and then you go and apply it instantly. It's like getting your first job after graduating. You know, if you've been through college and you've graduated, you understand that like, hey, I have a degree, and then you sit down to actually work and you know nothing. Yeah, you have to learn all of that shit. But then after about 6 months to a year, you start realizing like, okay, some of the stuff I learned in college is starting to apply itself. It's just like this in trading. You go through the course, you learn all the material, but then when you actually have to apply it, it can feel like a foreign language. The premium version of our Discord, you get to trade with us live every single day. We have 3 times per week mentorship meetups, Sunday night stock talks. We have live trade reviews, etc. It's a great way to take the knowledge that you learned in the 30-day masterclass and apply it directly through your trading almost instantly. This is a monthly fee. And before anybody says, oh, if you make so much money, how come you have to charge people? Well, it's very simple. One, I'm a businessman and I give a lot of time. And therefore, I want to be compensated for that. Simple as that. But number 2, I'll give you really the reason why I started this in June and July. Free content is cheap content. Nobody really cares. Trading is fucking hard. So when you get into a period of a drawdown or you're having difficulties, if it's free, you're just going to skip to the fucking next guy. And you're going to skip to the fucking next guy. And it's just you're never going to succeed. So by charging something, even if it's as little as $40 a month, it's going to give you an incentive to actually utilize the stuff that you are purchasing, even if you as an independent trader are having some difficulties, right? So that pretty much sums up the masterclass and the premium. I just wanted to give you guys the opportunity to understand that these are here for you. My name is Hamilton with the Trading Initiative. I hope you guys enjoyed this live webinar for swing trading. If you have any questions, please feel free, comment below. Like and subscribe if you enjoy this content. I do have free material. Go ahead and check it out. Lots of good stuff on my YouTube. And our Discord, link is in the bottom. I highly, highly, highly suggest joining. Contribute, learn a lot. We give a lot away for free. We give a lot away for free. And it's not bullshit. That's the best part. You're actually going to learn how to read a chart and trade independently and become consistently profitable on your own accord, not listening to other people's fucking bullshit signals. All right, guys, thanks for tuning in.